On the program now, we'll take a look at the Nigeria Forex market and we'll review issues that have come up in the course of the week. I'm being joined on the program by the Chief Executive Officer of Watershed Capital, Mr. Muyiwa Olariwaju, and the Chief Executive Officer of Kari Assets Management Limited, Mr. Johnson Chukwu. Good morning, gentlemen, and thank you for joining me on the program.
Good morning.
Good morning. Well, it's been a nail-biting week for investors, and I'm sure all of you have been closely following the issues that have been developing. Election dates have been shifted, Naira hitting record lows. But is this the first time, Mr. Chukwu, let me start with you. Is this the first time that Naira has faced this kind of pressure?
Well, this is not the first time. In 2008, 2009, precisely in March 2008, we had a similar experience. Naira lost about 20 Naira in a single week. We also saw demand for FS spike as a result of the crisis of 2008, 2009. But what has happened this time around is slightly different. This is a combination of both economic uncertainty, particularly exchange rate uncertainty and policy direction uncertainty, but worsened mostly by political uncertainty. If you saw what happened on Monday and throughout this week, it was basically because of reaction from the postponement of the election. The postponement of the election has created a lot of political uncertainty, and in that environment where you have no clear direction of what the policy will be, foreign investors want to exit, even local investors have to hedge, and there are several motives now for able to hold foreign currency, which has led to people front-loading their demand for Forex. And of course, the policy issues that have come up from the Central Bank over the past 4 weeks have not helped matters. So these factors have contributed to what we have seen in the market this week.
Let's talk about one of those policies, Mr. Olariwaju. We know that the central bank has says that going to the RDAS, that's the RDAS now, and the interbank market should be for some particular kind of materials. Not everybody should go there. For instance, authorized dealers and even some BDC operators have to buy their weekly supply of the dollar from the Central Bank of Nigeria. But how much of this is actually going to stave off this speculation we're seeing at the market?
Yeah, because we need to understand that one of the major challenges of our economy is that because our economy is import good dependent, we import a lot of things. So what the central bank is trying to do is to ensure that this is moderated so that demand for dollar could be regulated in such a way that at least there could be a kind of stability and regulate the rate at which the volatility of Naira.
Now, in terms of regulating, I know the central bank governor yesterday, he was in Lagos, had the bankers committee meeting, and was at the NSC, ruled out devaluing or floating of the Naira at this time. But what message do you think this will send to domestic and international market? Mr. Chukwu, do you want to comment on that?
Well, basically what the market is looking for is direction. What the market is looking for is assurance. Direction in the sense that they want to know, does the central bank plan to devalue further, or the central bank wants to defend the Naira? That will help policymakers take a position on what the right thing to do.
But CBN says they want to defend the Naira.
Yeah, the assurance that they want to defend the Naira. The other thing that the policymakers will have to assess the capacity of central bank to defend the Naira. We've seen issues where concerns have been raised about the possibility that central bank may impose some exchange controls. And that came up from the policy that came out in December when central bank said the banks will now have zero open position. And that's the heart of the uncertainty that was created in the first market. Now the central bank is saying, we're going to defend the Naira, we're not going to float. I absolutely understand why it may not be auspicious today to float the Naira. Because one, if you float, you don't have the limit where the exchange rate will get to. And then you have to look at the structure of foreign exchange earnings. 90% of foreign exchange earnings is coming from sale of crude oil. That 90% is going to central bank. So the central bank is a major recipient of foreign exchange inflows. The other 10% goes to several other units. That, if you want to float and you want market forces to determine the exchange rate today, and they want central bank to be only a participant in the market, you're going to have a monopoly participant who determines the price, which is also what you have today. So when the central bank assures you we're not going to devalue. We have to look at the capacity to retain the exchange rate at current level. And again, you need some level of intervention. You need to show that you have the capacity to intervene consistently, which is that capacity whittling away, because we're not talking about 33.8 billion in reserve. So these factors have to be taken into context for policymakers to have that assurance that central bank can remain faithful to its statement that it will not devalue further.
But Mr. Alariwaju, the Naira is already over 20% weaker, than the CBN's target rate of 168 Naira to the dollar. And black market traders are selling the dollars for as high as 210. What will happen if the Naira falls further? Based on, what Mr. Chukwu has said, the central bank has said it will continue to defend the Naira. But what if it drops further?
Yeah, definitely. If the Naira falls further, then the effects on different facets of the economy could be much, because like I said initially, and like my colleague also said, the first thing we look at is the capacity of central bank to defend Naira. And personally, I do not see that if the pressure is too much, that central bank will be able to sustain what they have said they are going to do. Yeah, because where do they get the dollar to do this? And you also understand that the impact of the decline in crude oil price cannot be eliminated. So definitely it's going to affect different activities, different sectors, different things, operation within the economy.
But then it looks like oil prices might be having, a little bit of a breather. At least this morning, oil prices are trading slightly above $60 a barrel, and well, with the Ukraine-Russia issue apparently being dealt with, it seems like investors are getting more comfortable again. And so if for any reason we see oil prices begin to climb higher from where we see it at the moment, would that be like a ray of sunshine for Nigerians?
Yeah, but we also have to deal with other uncertainties, political uncertainties, and we ask ourselves, you know that foreign investors, many of them, they are trying to be careful of their investment. And, if foreign investors want to call up their fund because of postponement of election, because that has actually increased the uncertainty in the political environment. So apart from the fact that crude oil prices are probably being stabilized from what is happening, there are other uncertainties that must be dealt with, that we have to have a clearer direction of where this will be going before we can say definitely it will be easier for central bank to actually curtail.
Mr. Chukwu, do you want to comment on that?
Yes, it's right. Like I said earlier, the prices we had in the market this week was principally a result of the fact that the election was postponed. Before the market will stabilize properly, we need to have the election behind us. We must have a successful election. We need to have a smooth transition. Then we also need to have a new economic policy direction. Whether Jonathan is going to come back as the president or Buhari is going to take over, we need a defined economic direction. Are we going to continue to run a free market economy, which people believe that the Jonathan government will run, or are we going to run, which some economic analysts believe we may have a mix, a dominance of public sector in the economic space should Buhari take over. But we need to have that for you to give both local and foreign investors assurance on what direction of investment to make. Then you have to look at the issue of oil price. Oil is traded in the futures market. The oil price of today will begin to impact on your receipts in the next 3 to 4 months. So this is the month of February. You'll be expecting whatever price oil trades today to have an impact on our receipt from the month of something like June.
And the markets are not going to wait for that to happen anytime.
Okay, so now what you have to look at, the impact of the oil price at $48 is just going to begin to manifest in our receipts because oil is traded in futures market. So trades of November and December are what we'll be receiving today. We've been enjoying a $70 receipts over these past few months. So what that means is that our foreign exchange is going to dry up further. And with a reserve of 33.8 billion, you should see a further erosion of your reserve. So in the short term, we have to contend with huge pressure on the FS market. Added to the fact that a lot of banks are trying to cover their foreign currency lines, are trying to buy up dollars to cover their foreign currency lines. Because very soon the foreign lenders will begin to call their lines as they see your reserve declining and as they see your capacity to meet foreign currency obligations dwindle.
Yes, I was just going to ask that question. What happens if the interbank market now is not able to fund, letters of credit, bills of collection, or other invisible transactions? Will the CBN have to change its stance?
Well, that would be the extreme case. If that happens, central bank the federal government has to borrow from IMF. I don't think we'll get to that point.
But it should be one of the scenarios.
Yes, it's a possibility. If we have low oil receipts, or we have this pressure continue to mount, and our reserve is completely eroded, then the central bank the federal government has to go to IMF to borrow. But the key thing is this: when you do not have a reserve to give international trading partners assurance that you meet your obligations, they will now want you to provide cash cover for all your trades, which is what led Nigerians to begin what is actually what introduced confirmed letters of credit in Nigeria. So you're going to get to a point where they need you to provide cash backing for those confirmed letters of credit, so that as you open the letters of credit, the funds are already in the foreign bank. At the point of negotiation, they will just move the money from that collateral account to the settlement account. That's where you get to where your currency reserve is too weak to provide assurance to your trading partners that you're in a position to meet your obligations. But I don't think we'll get to that point unless political crisis sets in. And that could trigger, once you have a political crisis, all the bets are off. At that point, you can no longer say for sure this is the direction, because you also have your countrymen fleeing, and all foreigners fleeing, and investment also run away from your country. Okay. But I don't think we'll get to that. We pray we don't get to that.
Okay. Well, still talking about bets, on Wednesday, the Debt Management Office raised about 76.5 billion naira short of its target of about 90 billion naira in 5, 10, and 20-year debts. Now, even though the 5-year debt note was supposed to be a fresh issue, we still saw that investors did not participate in the market as well as they should. Are investors hedging, Mr. Olariwaju?
Well, I will say that everything has to do with uncertainty, and that is just the truth. Do you actually want to put your money where you are not sure? And we all know, like you said, we are not praying for a political crisis. But should there be any serious political crisis in Nigeria, what comes of those investments you have made? And you have been talking about FG bond is risk-free because we are expected that federal government will not default. But if there are issues that we don't have clear indication of how government is willing to tackle those issues, you are sure that there's likelihood of default, because we have seen government in other economies who are defaulted on debt issues to investors. So I think what was responsible for this partly was because of high uncertainty within our economy at this moment.